5 ways Tesla Insurance will make billions. I'm Brian. Welcome to my Tesla weekend. How's it going, everybody? Can you hear me in the chat? Can you hear me in the chat? Did my intro work right? I hope it did. Saw a weird little lag on my end. But I think we can just get right into it. How is everybody? Give me a thumbs up if you can hear me. Looking good. Quick thanks to my newest Patreon, Patricia CH. Very cool. More about Patreon at the end, as usual. So yeah, car insurance. Isn't that fun? Tesla Insurance is uniquely positioned to make $11 kajillion. And yeah, we're going to absolutely explain why. Now, when I first heard about Tesla Insurance, I was not impressed. It just sounded like a distraction. And then they said, well, we're actually farming it out to other companies. We're just helping with the underwriting. I just didn't get it. But I get it now. And as always, Tesla's one step ahead. So what is insurance? I have no idea. What factors may affect your car insurance? Well, as you know, auto insurance premiums are based on your driving habits and demographics, factors, and other coverages that you want. So imagine if, yes, Robert, 11. Hello, Go Coyote. Imagine if, they look at your driving history to see if you've got any tickets or accidents. Imagine if only one company could tell if you had tickets or accidents. Imagine the advantage that they would have over everyone else. They would know where the actual risks are. Well, Tesla's got better data. So as opposed to just looking at, your driving history and you type a car, they can look at your driving in real time. Tesla Insurance, only available in California at the time of this article, launched in 2019, one-stop shop. Their pricing is based on the car's safety systems, not on personalized driving data. Well, that may have changed. It includes any kind of insurance you would want on a car. And it, at the time, wasn't available for Uber. Who cares? So the idea is, and they will have, at some point, multi-policy discounts, loyalty discounts, group rates, and even already, they offer a 12% discount for multi-car if you have more than one Tesla on the insurance. We've got Tesla Insurance using real-time driving behavior. It gives you a safety score. So they've got the best data by which to determine whether or not you are going to be a quality driver. So, Progressive does this as well with their Snapshot, but theirs is much more limited. It looks at, it plugs into the OBS port, and it can only tell, rate of deceleration, rate of speed, some very basic information, and only for a period of time that you have it installed. And there are also ways to game that make it less effective. But Progressive is just one of the new companies trying to get into this and struggling. And they do not have the camera data. They do not have access to a lot of the data. So that is how, it works. But Tesla drivers can also gamify safe driving. If you're at 90% and you want to go higher, if you've got a score of 90, it's not 90%. If you've got a score of 90 and you want to go higher, you can do that. You can drive like a grandpa. That is within your ability. But we will come back to that in a bit. So I've got a bunch of math today. I loves me, my math, and I'm pretty proud of what I came up with this week. But first, some background so that the math actually makes sense. And this is more on how to improve your safety score. Jumped ahead a little. So, the first question is, how many cars will Tesla be selling? 30. Well, they plan to sell 20 million. And I'm going to use numbers based on that. And even if they're low, even if they're well short of 20 million, the numbers will still work. You will see, and it's all in an actual spreadsheet, so we can massage the numbers as needed at the end. OBD port. OBD port. Thank you, Robert. Another bit of background. Let's look at this. How many cars are sold per year? Well, 15 to 18,000, less in 2020 because, there was this whole shutdown thing going on. So I lost it on here, but how many cars are insured? I lost it. How many cars are insured in total? It is about 203,000. 203 million. There we are. 203. In 2015, 203 million cars were insured. It's surely more than that now. And by 2030, I imagine it will be yet more still. Almost done with the background. Average cost of car insurance in November of 2021, $1,600 a year. And that's for full coverage. Now, this is pulled down by very safe drivers, the cream of the crop, the folks you really want to get, the ones who are your bread and butter, who pay every month and never make a claim, but also brought up by less safe drivers or those in higher crime areas who may have, a higher likelihood of a claim. I think we've got one more we got to look at. And what are the largest insurance companies? State Farm, 16% of the market, Geico at 13%, Progressive at 12%, Allstate at 10%. Those are the four we're going to focus on. So, is it math time? I think it is. Oh, I brought that up twice. Nice. I don't know what I'm doing wrong. Okay, here we go. Oh, how did I goof that? There we go. So this is the market share. This is the market share. Imagine this as the entire auto insurance market. It's 10 rows across and 10 rows tall. Wanted to make it a nice even 100. So right now you've got the folks like Allstate, who have about this much of the market, and Geico around this much percent of the auto insurance market. And what would it be? Allstate, who has about this much percent of the market. Average policy, 1674. Total cars in the U.S. insured, 203 million, surely higher. We can massage those numbers at the end if you want to see it run a little differently. In 2030, there will be at least 15 million new cars sold in the U.S. I think it'll be higher. I think it'll be more like 20 or 22 million. But again, we can change that. What percent of the market will Tesla have? I'm going to say 20%. I honestly think it'll be more like 25 or 30%, but 20% I think is a very safe estimate. So, Tesla's 2030 sales, 3 million cars in the US, and let's just take 10% of that. Let's say only 10%, only these people here are buying Tesla insurance. The top 10%. Yeah. So at $100 a month, how much money is it? That's $30 million a month. If just on 2030 sales and just if Tesla is capturing the top 10%. The people who don't make the claims, the people who drive safely, the best of the best customers. Let's get exciting. What if we stretch it to include these folks in the top third, the top 70%? That would add an additional 96 million. So the top 30%, and that's at $160 a month. Yes. So the top 30%, $126 million a month. That's $1 billion a year. So that means if they're capturing just this slice here, just that's $1 billion a year. Or just that, you get the idea. Yeah, no, it'd be that. Okay. But that only represents 2030 sales. So how many total Teslas will be on the road? More like 20 million is my guess, because we're ramping up to that huge number, which I honestly think is going to be more than 3 million in total sales in the US alone in 2030. So if you were to get the top 30% of just that, that's top 30% is 6 million, is 6 million cars. Oh, right. Yes. If you get just the top 30, that's 6 million insured with an average premium of, let's say, $125. That's $750 million a quarter, a month. That's $750 million a month. That's $9 billion in premiums. And again, that's just the top 30% of drivers with a Tesla. Well, a lot of people won't buy it. Well, a lot of people won't buy it. Yeah, we gotta factor that in. Do we? Because if it's cheaper, it's cheaper. If it's even $30 cheaper, that's $3,600 over the 10-year lifespan of your car. So it's gonna cause a split, and that's where the legacy guys get into trouble. Let's bring this back up. The legacy guys get into trouble, and the death spiral begins. So, what happens when these drivers are no longer insured with Progressive? You see, insurance is all about sharing risks. These guys struggle to get insurance. These guys less so, but it's expensive. Geico, State Farm, Allstate, they live in this space. But what if that last column is gone and the column next to it is gone, and maybe that one too? What happens to the premiums for these drivers? Without these gravy goodness to subsidize it, those premiums are going to go up. So Tesla might be saving you 25 or 30% on your insurance early on, but the old guys are going to get more expensive, and Tesla's going to be able to just keep driving down the price. Or just keep it just barely better than the competition with vastly fatter margins. I mean, that's what they're doing with auto sales, which is a historically lean business. And then more people switch, and then the death spiral continues. If Tesla's just getting, what did I say, 6 million cars insured in 2030, out of 200 million, that represents this much, just that. But it's likely to make more profit than the other guys. So how much money is that? Well, it's a lot, and it'll only get wider. So what have we got in terms of caveats to bear in mind? And by the way, if you got comments or questions or concerns, get them in now, because we're screaming through this. Tesla's full self-driving safety score explained and how to apply for beta. So there's something pretty far down here I wanted to show. Tesla claims that most drivers will have a score of 80 or above. So let's go back and look at that. If 80 is a good score, that means this isn't your Tesla market, but this is. That means they're likely to capture this much, 14% of the market, making them the second biggest. It could be, ridiculous. And the number of cars will keep increasing. And if other vehicles, have quality data that they can look at, maybe they can expand the fleet to cover those as well. So we've got that. Car companies, so now the question is, why can't the other guys do it? Well, car companies are preparing to sell driver data to the highest bidder. Unless you own your own insurance company, there's a middleman in there. Your data may be sold to Geico, but odds are you wouldn't even know it. If your car is connected and has that wealth of data, it's being sold, and then you get the marketing. And it may be very bad marketing. You might be someone who drives very few miles, and very conservatively, and in an area where hard braking and hard turning are just not an issue. And one day you may get an offer for very good insurance, but you won't know why. And the gamifying aspect won't necessarily apply. And again, with the market getting wider and wider between the cheap guys and the expensive guys, Tesla and everyone else, the people down in this area who are like, gosh darn it, if I could just get my safety score up, I could save a ton of money, they might just do that. They might just do that. The other concern, let's see here, autonomous car insurance drives new opportunities. There's a theory that when cars are fully autonomous, no one will need insurance. And that's true to an extent. This company says we're able to price robotics risks better with the manufacturers and operator-level data we collect through the platform. Now, this is data, again, that they're going to have to pay for. Because if you think Chevy or Ford is going to give that up for free or even cheap, I think you're mistaken. But even an autonomous car needs insurance. Because you can have a blowout, you could have your car vandalized, your car could be set on fire, you could have other damages outside of your control. And let's not forget, the whole point of having 400 or 700 or 1,000 horsepower is to drive it yourself. Because full self-driving is not going to whip you around the track in ways that are quite as meaningful to the driver as driving. So insurance may get cheaper, it may get less profitable, but I cannot see it going away. Also, other cars can hit you, which is not ideal. Now, General Motors does have OnStar insurance, and their next generation of cars will have richer data that can allow them to do something similar to this. Maybe their engineers are just as good. Maybe their back-end developers are just as good. Maybe they can get in on this just like Tesla is. And their current production would mean that they would have a substantial advantage. So they could compete in ways that Geico, State Farm, Allstate Insurance, Farmers Insurance, Progressive Insurance just can't. Because they're stuck buying the data and only getting the data they want. Do you think OnStar is going to give Progressive access to the very best customers? I think they'll weed through it and give them the trash. That's what I think. So we're going to get on to the Q&A. If you've got questions, by all means, ask them now. But a quick thank you to my Patreons who get early access, bonus material, an ad-free experience, and help keep the channel running for as little as $1 a month. I literally can't do it without you guys, and I thank you for it so much. And yeah, it's a lot of fun, and it's a lot of work, and it's difficult. So, let's get to the questions. Before the video, Mega Wilderness said, huge flaw in your argument because FSD will be self-driving by then. Let's just move this up. Will be self-driving by then, and there will be no need for insurance. And I did take that into consideration before the video came out, which is why I addressed it. Insurance, I don't believe, is going away. There's no need for it to go away. I'm sure we would all agree that it probably should go away, but it doesn't need to. And if you're going to do any amount of personal driving, you need insurance. And again, even if the car is self-driving 100%, there's still people hitting you, there's still fires. What states do Tesla sell insurance in, and when will it be all 50? The answer is a few, and the second half is we don't know yet, because every state has its own insurance commission, and the rules are different everywhere, and it's a pain. Jude is saying that Elon says that it'll be in all 50 states this year, so in the next 5 weeks. I don't know. It's a state-by-state approval process, yes. Thanks. You bet, Timothy. You are welcome for the info. It can only move as fast as the slowest entity, the government. Smoke landing on the telescope lens is no bueno. General Motors is fundamentally incurious. When do we think the stock will split? I believe after the next shareholder vote, because I think they want to split more than 2-1. And Dave Lee said that they would require shareholder approval to have that many shares outstanding. But of course, it would be approved. I'm guessing Tesla offers an FSD insurance package on a single monthly bill. Yeah, maybe. But would it count when you're only in self-driving? Because again, a lot of people are going to want to drive. Mega Wilderness. Insurance companies in the UK provide monitoring black boxes, internet connected already. Tesla are late to the party. Those do not capture the wealth of data that a full suite of cameras and sensors can. So it is different. And it's different. Bad drivers will be forced to use Tesla as a service or pay a large amount. Either way, Tesla wins. I wonder if lending institutions will account for lower insurance costs in lending costs. I don't think so. I don't know why they would. Elon has said insurance in all 50 states next year. Tesla doesn't have to have the whole market, cars or insurance, to dramatically impact the entire market. I agree. And I don't want them to own the whole market on anything. I want competition to remain robust and healthy. When is the next shareholder vote? I assume in about 2 months. It's quarterly. And it's usually done at the same time as the earnings report, so about 2 more months. All right. Any more questions? By the way, JJE, thank you for the super chat. I appreciate that. And he asks, what about Nikola Insurance? Maybe. If they are, and you raise actually a very good point. The new players are playing by different rules. When you start from the ground up, you can do things differently, a lot more easily than trying to turn a giant ship in motion. So if Nikola is going to be adding all the sensors and self-driving data that is necessary, which it appears they are, there is absolutely no reason that they couldn't do this as well. So they could either sell that data, which early on maybe they will, or they could more profitably keep the data and sell the insurance themselves through a third party like Tesla does. Thoughts on privacy concerns? With non-Teslas, 100% yes. Privacy concerns on Teslas, at current you have to opt in, so no privacy concerns on that. And in terms of collecting just telemetry data, I don't know how that would be useful to anyone. Like if you were to hack my car and see my driving telemetry, I don't know what possible use you could have for it. I hear Nikola's Insurance is all downhill. Well, Jeff, gravity is one of the strongest forces, at least as far as humans can perceive. Your insurance will have privacy riders. Yes, absolutely. You would definitely have to opt in if that's something you're going to use. Where do I think the next Gigafactory will be? I have a whole video on that. But I honestly think, apart from expanding existing ones, which is happening, we know it's happening in Shanghai. There's a phase 2 already permitted in Texas. Berlin, I think they're waiting to get through the red tape before they make a final decision. But in terms of new places, my guess is India. I know, crazy, right? If you're concerned about privacy, throw out your cell phone. So I used to work for a company that sold human chips. And we would periodically meet people who were so concerned the government's going to track you. And, I don't know how to explain this better. The government, you already are paying for the ultimate spy device. It's got several cameras. It's got GPS. It's connected to the internet. It's got microphones. It's got a wealth of information. It's got all your contacts and your emails. It's got every photo you've taken with it. The data, your data, we could benefit from a new privacy bill of rights, but all of our data is worth money. So I don't think that's going to happen ever. Okay. Any more questions, or shall we call it an early night? That was fun, you guys. That was fun. Thank you again, JJE. Thoughts on new COVID affecting Tesla or Nikola? I don't have thoughts on it because it's the news is too new. It is just too new. It could be worse than the first time. It could fizzle out on its own. It could be misreported. It's too new for me to have an opinion. But I think the public's appetite for lockdowns has expired. And I just don't know if we're going to see them. If Tesla is going to sell 20 million cars by 2030, they will need a lot more factories and fast. They won't. They won't. They'll need more factories, but not a lot. Fewer than you think. Fewer than you think. I honestly believe Austin and Berlin are going to be hitting 2 million, maybe even before they expand. And I think the small model, the $25,000 model, is going to take a simplicity approach, similar to the Cybertruck, though probably not quite as ugly. And that will afford them the opportunity to produce much quicker. The same line, higher volume. So they will need more factories. They will at least need to double the number of factories, but they got 9 years to get there. And it takes them year and a half to build a factory. I think they can absolutely do it. All right, guys, I think that's it. I think we made it. I think we survived. So what did I miss or misunderstand? Especially if you're catching this on the replay, leave your comments and thoughts in the comments below so I can, address those. And stay tuned, stay juicy. I can't wait to hear from you guys on the flippity flop. Sorry it froze. Who is this? I'm not sure why. I'll do a better reboot next time.